All right. So you're smiling. What about home buyers? Should they be smiling? What direction is the home market going? We just kind of hit on the fact that mortgages are above 6%. Do you see them getting below 6% coming up in the new year?
It's very hard for mortgage rates to go below 5.75% with Fed policy where it's at. So unless the labor market breaks, jobless claims heads up, unemployment rate gets worse, this is as kind of the low level we're going to get. However, since late 2022, as long as mortgage rates just stay near 6%, we've seen home sales grow just a little bit. It's never going to be a booming housing market in terms of sales, but it's something you can work with. And unlike last year at this time, mortgage rates are already at 7%. This year, it's different. Mortgage spreads have improved. We have a lot of rate cuts in the system. As long as rates could just stay near 6% and not shoot up again like it has in the past few years, we could get a little bit of sales growth in 2026.
All right. So you mentioned the Fed. We got the Fed minutes yesterday. A lot of members saying that they kind of see the rates should stay on hold for quite some time. So straighten us out, because everybody talks about cutting rates in the housing markets and mortgages, and the fact that they cut rates, we actually saw mortgages go to the upside. How big of an influence does the Fed have on housing rates, even though they have they're cutting rates, but that generally has a bigger influence on the 2-year. So just straighten us out. Give us the real story.
It's really when the bond market thinks the economy is going through recession, the 10-year yield goes low and mortgage rates follow with the 10-year yield. So again, unemployment rate has been rising. Because of that, the only reason mortgage rates are even here is because the unemployment rate has risen. So as long as the labor market is kind of soft, rates should stay here. Now, the X factor is if jobs starts improving, unemployment rate goes down, wage growth starts to pick up, I do believe rates will go up under this Federal Reserve mandate. However, with that said, we have a lot of rate cuts in the system. Mortgage spreads have improved. That's a really big deal for the housing market.
Wait, explain that one, Logan. You can't just throw that out. Why are you saying mortgage spreads have improved, and why is that so good?
Mortgage spreads are the difference between the 10-year yield and 30-year mortgage rates. Back in 2023, it was over 3%, and now we're about 2%. That's a 1% difference in mortgage rates. That's the big variable that's changed now compared to 2023, and we've improved from 2024. So as long as the 10-year yield just stays around here, doesn't matter what Fed rates policy is anymore, we can keep mortgage rates near 6%, which wasn't the case in the past few years. 6% mortgage rates could get sales to grow a little bit. That's been the model that's worked in the last few years. And now that mortgage spreads have improved a lot since 2023, that gives us a better backdrop for rates to stay lower for longer.
All right. So you say inventory is expected to grow in 2026 and the growth of pricing is expected to slow down. But talk to me about affordability. Those are great trends, but what about affordability? Do you see any change in the affordability of housing or more just inventory coming on when it comes to new housing, which I think would push prices down, right?
Now, affordability has gotten a little bit better because wage growth has outpaced home prices the last 2 years. I'm looking for that to be the case again in 2026. So it's not going to be spectacular in any ways, but we get a little bit of improvement. Again, when you're working from the lowest levels of existing home sales ever, really adjusting to the population, it doesn't take much to move the needle. But the key is, as long as rates just stay near 6 and we have stability, right? Stability in rates, not have these wild 1% moves like we've had in the past. You get a little bit of sales growth in 2026. We've got a little bit of sales growth in 2025, so we can just keep moving with that trend. But if the labor market accelerates, wage growth picks up, unemployment rate goes down, with this Federal Reserve, they'll sound very hawkish because inflation is still 1% above target and rates should move up there. That would be a detriment to the housing market. But as is, we're going into the year with a little bit of demand growth. That should continue in 2026 as long as rates stay down here.